Hey, hello everyone. Welcome to ETRealty. I'm Ankit Sharma, and today we have with us T. Adhikari, Managing Director and CEO at LIC Housing Finance. Thank you, Mr. Adhikari. Thank you
Yeah,
for
thanks,
joining
Ankit,
us.
for having me.
So, in the last few years, especially in the next previous financial year, there has been a lot of growth in the real estate sector that you have witnessed, and we have also witnessed the growth, especially in the premium or luxury segment. Most of the builders that are developing projects are being developing this kind of projects. From a housing finance company, where have you seen this trend moving in the last 1 or 2 years, or where do you see in the next 2 years this demand or trend is moving from your perspective?
Well, yes, agreed. In the last year, if you say, or last year or a few years, yes, most of the developers and builders are into the semi-luxury and the luxury segment. And that is where the margins are for them. But from the housing industry perspective, what I see, I think the future, the coming 3, 4, 5, 7 years, we see a lot of demand coming from the tier 2, tier 3, tier 4 towns also. Affordable is a big buzzword in the industry right now. And as far as the housing finance companies are concerned, I think that is where our margins lie. Most of the housing finance institutions are gung ho about the affordable segment. The potential there is, the demand there is. So I feel that yes, there will be a demand for the semi-luxury and the luxury segment, but I believe there'll be a greater demand in the affordable segment.
In the affordable housing finance segment, a lot of housing finance have come in, and they are trying to gain market share within the tier 3, tier 4 cities. They are trying to bring in the kind of their ticket size is very low, 5 lakhs, 6 lakhs, 7 lakhs, right? And this is where they are trying to grab the market. As a industry leader or industry veteran, how do you compete with these new companies that are coming in, or how do you compete with the existing companies who are moving into this particular segment?
Well, to be honest, LIC Housing Finance, I wouldn't say we were not into the affordable segment because we were giving ticket loans in the size of 15 lakhs, 20 lakhs and all that. But we were mostly concentrated on tier 1, tier 2 cities. Yeah, last year we tried to diversify. We opened about 46 new offices. Some of them are in tier 3. And right now, of course, in the current year, there is no opening of new offices, but we are trying to build up our sales teams in tier 3 and tier 4 towns and trying to, I would say, expand our operations into those areas where we previously did not exist. As I said, there is a lot of demand from those areas. And being a big housing finance company, we feel that we need to be there. We need to, I would say, encash the opportunity which is available there and build up our books over there.
But whenever it comes to these particular cities, one of the aspect is the disbursement part. The cost of disbursement, the cost of acquiring new customers, and the kind of disbursement, and then when you're going to collect this money, that cost is very high because this is more of a manual process. Even if you bring in the technology, this will be more for tier 1, tier 2 cities. But when it comes to the smaller cities, you will have to have this manual checks and manual movements that people is required. That cost is very high. What is your take on it? Do you think this cost is very high? And if yes, how do you manage that? If you are going to this expanding to these smaller cities, smaller pockets, and you want to move aggressively, this will be a very high burden on your financials.
No, agreed that the moment you move into the affordable segment, the due diligence is probably higher. Your risks also are probably higher. You need to have specified structures to sort of take care of the receivables and take care of the delinquencies. Agreed. But the other part of it, that affordable, my margins also are higher. Right?
Yes.
So I think the higher margins offsets the higher onboarding costs and the management costs of the thing. So as far as I am concerned, I find it to be a win-win situation.
Okay. How was your last financial year till March? So how has been the first half of it, and how are you looking at the next half of this financial year?
Well, last financial year, as I said, it was a year of a lot of changes and consolidation for us. So we changed our technology platform, and then we went in for some restructuring of the organization. So last year, I would say was okay, so nothing great. This year is what we said that would be the year of performance for LIC Housing Finance. First quarter was, I would say, so. Elections were there, heat waves were there of the country. So overall, if you see the industry as a whole in the first quarter, did not do I wouldn't say did not do well, did reasonably well, but then did not meet the kind of expectations that the markets probably had. A second quarter, yes, I see a lot of consolidation happening. Yes, we are on the right path. And I think the real progress or growth will start coming in from Q3 and Q4.
Okay.
So this year we are quite gung-ho about our performances, both in the growth in the loan book, also on the disbursement book. Pretty optimistic.
Okay. What kind of growth you're looking at? Percentage-wise, if you look at it, how was your last financial year?
Loan book last year we grew at about 4.5%. And one thing we have to keep in mind, we have a huge loan book of almost about 2,85,86,000 crores, right? So from this big base, showing a huge growth of probably like 20-25%, like some of my smaller compatriots or smaller housing finance companies are doing, that would possibly not be possible for housing finance, LIC Housing Finance. We are looking at a double-digit growth in our loan book this year. Yes,
Okay.
we are looking for a double-digit growth, and yes.
And what about the profits?
Profits last year, our PAT was about 4,700 crores approximately. So, what? 10 to 15% growth in profits.
Okay. And what about the NPS, gross and net NPS? How are you looking at, and how do you see it from an industry perspective? Because if this affordable housing segment is being brought in, and this is where most of the companies are going in, their net NPA or gross NPA is expected to increase because their risk is higher in this segment that the people are moving in and want to grab this kind of market. Does this impact the overall industry? And you as a company, how do you manage there to keep the NPA low?
No, I think the data available in the public domain shows that it's not that if you move into the affordable housing market, your NPAs go up. There is a potential of the NPAs to go up, yes, by basically since this is a slightly riskier market. But if you are if you are able to structure your operations properly, due diligence during the loan disbursement process, and thereafter have a robust receivable and delinquency control machinery, the industry as such, the NPAs are not very high. If you look at your housing finance companies like Aptus or Aadhar, who are mostly into the affordable segment, their NPAs are very much within control. It's nothing alarming.
And what is your NPA as of now?
Right now, NPAs, because of the legacy issues we had in the past, we are at 3.31 as at the end of last year.
Okay. And ideally, where do you want to be?
Well, ideally, I'd want to be less than 1%. and so we are working towards that. The quality of our loan book is definitely improving. But yes, there are some big sticky loans which still exist in our books, and all sorts of legal procedures, legal follow-up is being done. SARFAESI, IBC, NCLT, these are all time-taking sort of operations. But we're also in touch with most of our borrowers and trying to get them to the negotiating table, trying to get them to the settlement table. And I see a lot of positive movement happening in quite a few big loans. I'm very optimistic about the quality of the loan book improving much better than 3.31 this year.
Okay. Last time also when we talked, we talked about the corporate loan book that we had before, LIC Housing Finance had before. Have you seen, so at a time there was that you were not extending any kind of corporate loan because of the legacy things that have happened in the past. And now do you see that it is time to move this kind of corporate loan book, or you still want to wait for 1 or 2 years for things to settle and then move into the segment?
No. We are very clear on that. Okay. We made mistakes in the past. Probably we were a little bit naive. We were new.
Yes.
And I think too exuberant and euphoric. And we jumped into the water without testing the waters. That is what I would say. But we've learned our lesson. We've learned our lesson. And now we are a much more, I would say, matured and sane organization. Now we know what needs to be done and what does not need to be done. The builder segment, definitely, if there is growth, if there's going to be growth in the housing finance industry, it's all a question of demand and supply. And also, if there's no supply, there's going to be no demand. And since supply has to come from builders and real estate developers, we need to be there in that market. So consciously, we are not saying no to the builders or to the construction finance companies. We are optimistic about them, and we are disbursing. This year, almost near about 2,000 crores of disbursements have already happened. and we are aggressive on that. But yes, we are very, very picky, and we are very, very choosy. And the levels of due diligence are slightly higher. It is not that we are advancing loans to all and sundry. We are being choosy, and we are definitely quality builders, good rated builders. Yes, we are pursuing them also. We are eyeing them also.
Okay. What is the average ticket size of the home loan that you're disbursing as of now? And if you're moving into this affordable housing segment, do you see this reducing in the coming 1 or 2 years?
Yes, as of now, our average ticket size is about 30 lakhs.
Yes.
Right. So definitely, once we go into the affordable housing segment, this will come down. This will come down. But this year, as I said, we have just ventured into the affordable housing segment, and we are not going to be very, very aggressive or gung ho about it. We'll take sure and measured steps and enter the market, test the market, build up our systems and our infrastructure. Yes, there will be an impact. Definitely, there will be an impact on the overall ticket size of the thing. But I don't think in the current year it's not going to be very significant. But going forward, maybe in the next 2 to 3 years or 3-4 years, yes, this would probably come down to somewhere around about 20, 22.
Do you want to move into this mid and mid premium segment? So mid segment already you might be there, but mid premium segment is something that is also coming up. So you might not want to go into the luxury segment, and there might not be as much loan requirement in the luxury segment. But mid premium segment is something that is also come up. Do you think that you want to venture into this?
Yes, definitely we'd want to be there. Definitely we'd want to be there. That is one segment which is also growing. There is some demand, and many of the big builders are into it, as I said, because of the margins business.
Yeah.
Now we are trying to establish relationships with all these big builders, since we are eyeing the top category,
Yes.
or top rated builders. Definitely we'd like to go into the mid segment, not only even the luxury segment. Why not? Why not? If there's a demand in the luxury segment, why should I not be there? So definitely the mid premium segment, the semi luxury segment, and as well as the luxury segment, we would definitely want to be there.
Okay. Last 2 questions. What is your expectation from the coming repo rates that are going to be in this financial year?
Well, repo rates have been stable for almost about near about 2 years now, and we are at 6.5. Lots of news every time there's an MPC coming up. All sorts of news coming in the market. RBI is again pretty much, I think, focused on inflation, though inflation, the latest, the July numbers have shown improvement. The big news, Bank of America, or the Federal Reserve has increased, has decreased repo rates by almost 50 basis points. My take on that, I think there's an MPC coming up in October. I personally feel that probably in October we would not see a rate cut. I personally feel that the December MPC, I expect there to be a rate cut of about 25 to maybe slightly aggressive 50 basis points. So that is my take.
Okay,
fine.
And there are a lot there have been a lot of IPOs in this particular year, and there have been real estate IPOs, there have been commercial IPOs, then there have been housing finance IPOs also. How are you looking at this market? How are you looking at this IPOs? How are you looking at the kind of money that have been poured into this segment and the companies that are bringing in? What is your take on this?
Well, honestly, by what's happening, I'm tempted. I'm very much tempted to be in there. And all sorts of companies are getting 300x, 400x subscriptions. A company like HFL, I can only just imagine if we get into the market, what do we get? But yes, we are right now not looking at an IPO. Probably coming year, in the coming financial year, we're looking at an IPO. Right now, we are adequately capitalized.
Okay. And what is your take on the existing IPOs that have happened? Any IPOs? So are you looking at this market?
Well, one word, it's scary. The environment, what's happening is scary. That's all I would say. And it's mind-boggling, it's scary, and I hope...
so that is why you are staying away as of now?
No, not exactly, because an IPO process takes time, and then we never envisioned of a scenario like this. So it was not a part of our plan, right, at the beginning of the financial year or anything of that sort. So not because of anything untoward in the market or anything of that sort. But yes, definitely going forward, we will be looking at some sort of an IPO.
Thank you. Thank you, Mr. Adhikari. Thank you for joining us. Thank you, everyone.